Hi, this is Joan Norton. I'm doing my webcast in November. We already know who the President of the United States is. We didn't have to go through a long, laborious counting process, thank God. Anyway, as you hear this, many of you will be receiving my calendar and also Thanksgiving note. And I've enclosed a couple of business cards. This is a good time to review moving forward 2013, what's going to occur. Many of you are hearing things on the news concerning the fiscal cliff. We're all going to fall into the ocean. Of course, we all know the world's going to end on December 21st, 2012 because of the Mayan calendar that was done many, many years ago. Anyway, I'm making a joke. I think when you look at some of the projections in terms of what the election was going to be, you realize just how much the media does not know. And isn't that something I've been telling you all along? Anyway, welcome to my webcast. If you know somebody that is trying to review their financial plan, as you are, I've enclosed a couple of cards. Give them my card. You need a plan. You don't need to be guessing what Congress is going to do. You need to know what you're going to do in terms of this next coming year. So those of you that receive that, the calendar starts in December. Give my office a call. We're setting up appointments after the beginning of the year. Okay, this is sort of an interesting situation about what the future holds. And again, I want to advise you all that you can freeze frame this. Take a look at it. What this is this is from The Economist, September 22nd, as you can see at the footnote. But it talks about what's happening with driving. You know, we have this tremendous interstate that was put together starting under the Eisenhower administration. Cars were king. 50 years of the greatest car growth ever in this country. But the future of driving doesn't look so good. And look to the left-hand side. You're going to see 83. You're going to see 2010. And you're going to see the fact that we have less young people driving. I mean, this is unheard of. It used to be a big thing that you'd want a car, etc. When you look at the right-hand side, excuse me, you'll see that there are more seniors driving than what we see in 83. So we have a new market. And what we're looking at is, as far as the car industry is concerned, they're pretty much tapped out as far as the first world, okay? This is the supposedly developed world. Where you're seeing car growth is in the third world, okay? The other thing to be aware of is why is this, that young people aren't as involved with cars as they were before. We have tremendous growth going on in the 51 largest states in the United States. So again, look to see declining car sales in the U.S. People don't need it. Young people don't need it. They're living more urban. So this is a trend that is coming. What does that mean? There's going to be zip cars. They now have them in Europe, where you can just use a car for a certain period of time. Some of you have already seen these little smart cars. So that's what you're going to be seeing more and more in the cities. You're also going to be seeing probably pollution taxes like you do in some parts of Europe now if you have a big sort of gas guzzly type of car. So the big changes, and this is big changes in the market. Of course, the media is not telling you this, but this is something that you as an investor need to be aware of. Okay, let's see the other thing we need to be aware of. My last webcast, hopefully you listened to it, we talked about Africa, and I want to go back there again. Africa is a continent. It is not one country, okay? But if Africa was one country, it would already be middle class as far as the gross national product that it produces. Their growth in Africa for 2012 is expected to be 5%. That's higher than any other area in the world. Okay, and this map is fascinating. You can see how very big this is. Look at the United States, look at China, Mexico, India. It's enormous. The problems they have in Africa right now, they have tremendous resources. We have a 400 million population there, and they're basically need to become tech savvy. We have the technology outside of Africa huge demand in Africa. What they're projecting, when I say they, I'm talking about The Economist, and this was in their October 20th issue of this year. By 2025, most of Africa will in fact be middle class. This is an emerging market. This is where India and China was about 10 years ago. And again, my source, The Economist. Africa needs a couple of things. They have tremendous natural resources, but they need more capital. Many of you are aware of the fact that I said China is big time going into Africa with money, but they also need skilled workers. So again, a 5% growth rate that you're seeing here in the continent of Africa. You're going to be seeing the jobs are going to be tremendous jobs that are going to be going on in Africa in terms of manufacturing, development, resources, etc. So this is one of the emerging markets that's doing, not only going to do well, but is in fact doing well. The other thing I want to talk about is I want to talk about America and Europe and relying more and more on research and development in terms of private rather than government. You can see here private is ticking up in the United States in terms of research and development, and government, you can see, is really falling down in terms of the research and development that they're funding. Again, this is the National Science Foundation. And you can see in Japan as well, where money is being spent. South Korea, tremendous amount compared to us in the United States, almost close to 4%. We're at 2%. You can see Great Britain, China, again, is inching up. But again, a lot is going with research and development, and you're seeing that in the private sector. How does that translate? Small companies, larger companies, bigger sections of larger companies devoting to R&D, new products. All of this is good, positive information going forward, okay? Now, we talked about emerging markets. That was Africa, continent of Africa. We talked about research and development. Those were all emerging markets. We're going to see tremendous growth, in my opinion, in this coming year in that area. But what I want to do is to remove some of the fuzziness when we hear the talking heads on TV talk about different segments of the market. Now, what we're talking about here, and again, I'm referencing The Economist, this is industrials. And you've heard things like the Dow Jones Industrial Average, okay? These are the top 10 companies. This is not all of them. The Dow Jones, for instance, itself is 30 large U.S. companies. But these are some of the industrials that they're talking about. General Electric, you've heard me talk about them a lot. 3M. Caterpillar. Let's talk about Caterpillar. Let's talk about the fact that doom and gloom, the end of the world that's going to happen, because Congress is just going to let us go over this fiscal cliff, which I don't believe is going to occur. Again, if they do nothing, that means we go over the cliff. So they have to do something. Otherwise, we'll go back 12 years and rescind the Bush tax cuts. So that's not going to occur, in my opinion. But let's talk about Caterpillar. There's two states. I think one was New York and New Jersey, and they had tremendous devastation. Do you think maybe that will be rebuilt, those areas? Of course they're going to be rebuilt. That means more jobs. That also means places like Caterpillar, some of the other things that you're seeing here, Honeywell, Ederson, etc. Tremendous jobs, tremendous growth is going to occur because we have to rebuild that. We're not going to leave it as a third world zone there, okay? So you're going to see tremendous funding that's going to go on, and that's all from a negative, a very positive comes. So when you hear industrials, these are the companies that they're talking about. The other thing they talk about is consumer staples. You'll hear figures like, oh, the consumer staples or this or that or whatever. What they're talking about are just, and I've used this before, Procter & Gamble. No matter how bad things are, people are going to buy soap, toothpaste, things like that. Walmart, Kraft Foods, CVS, Colgate, okay? These are consumer staples. As part of your portfolio, you have mutual funds, obviously, that are in these. These are the steadiness of your particular investments. These are the ones, Coca-Cola. These are the ones that pay dividends. And remember, dividend is king, because even if the market goes down, you're getting dividends. You'll get dividends at a discount, okay? And then when the market corrects, those price per share will go up. So again, here's our consumer staples. These are the things that people will need all the time. All of you are invested in this, because all of you that are invested with me have some part that's in the S&P and the Dow Jones for the dividend aspect of it. Now, they talk about discretionary. This means, okay, I've taken care of the toothpaste and all of that. Now, what are things that, you know, maybe I'm interested in buying if I want to? And again, you're seeing Walt Disney, Comcast, Time Warner, Targets, Ford, of course, who didn't take any bailout money, by the way. My clients will always remind me of that. One of the big things that we see here, though, in terms of discretionary, is we see McDonald's Corporation. McDonald's Corporation is going to be interesting to see what happens with it, because for the first time in, I believe, 10 years, their sales are down. And what they're suffering from, of course, is all the information about maybe pink slime isn't that they use in the food isn't the best for you, and the other thing is, you know, overweight nation and a lot of those other things that you've heard. So it's going to be interesting to see how McDonald's reinvents itself for this new area that's coming along that is going to be more health food oriented. And again, what does that mean? That means newer companies that are going to be emphasizing whole foods rather than, you know, these prepackaged manufactured type of foods. So again, consumer discretionary, this is what they're referring to. When we talk about energy, we all know Exxon, Chevron, all of that. And again, pretty much all of you are invested in this because you all have some equity income. You also have some dividend growth, those types of companies. All of those you can see are in fact, you know, part of the energy area. Energy is in different ways, obviously, not just oil. It's also in gas and natural resources. You know, some of the companies are looking at wind, getting involved in wind and solar, etc. So these are the companies, some of the companies that we're referring to when we would use the word energy stocks. And you'll hear that, many of you, when you listen to TV. Now, financials. When they talk about financials, these are the companies they're talking about. You all probably know most of them. The one that jumps out at me is Berkshire Hathaway. You've probably heard of that. Warren Buffett. Warren Buffett just makes money. You know, give me the dividends. He invests in Coca-Cola and American Express and, you know, good, solid U.S. companies that pay dividends. So these are the financial companies they're talking about. These are the ones that are going to give you a sense of the borrowing, how companies are going to grow, what have you. So again, this is these are these companies. So, and again, healthcare. Healthcare, obviously, very important. Huge growth area. You can see some of these Merck and Pfizer, Johnson & Johnson. Many of these are foreign companies, and that's why a lot of you will see that you're in some international. You'll also see you're in some global companies. Bayer, for instance, everyone thinks Bayer is a U.S. company. It's not. Bayer aspirin, and we all know that. That's a foreign company. So, but this is what they're referring to when they use the word healthcare. We're expecting tremendous growth here, especially with the aging of the baby boomers. Another area that you've heard about, materials, and what we're talking about here, obviously, DuPont. This is the mining. Remember, we were just talking about Africa, the copper that's there, the natural resources. These companies are going to do very well, Dow Chemical, because they're going to be the companies that are going to go in and are going to find those natural resources, and that's a big part of where the jobs are going to be. So again, I just want you to make sure you understand Monsanto, etc., who those companies are. Okay, and then of course talking about technology. Apple, obviously, Microsoft. It goes without saying who those people are. And technology, we're expecting a big push in technology this year because as Africa, remember, it's about 10 years from where China and India are now, okay? We're not going to go through the whole process of communication. I'm looking at Verizon here, of telephone poles, etc. You're talking about mobile communication. Okay, mobile use. These companies are all set to have great growth as technology, communication becomes more and more a part of our life. Utilities, we've certainly heard about that. You know, the utility average, etc. These are the companies that they're referring to. Electric Power, PG&E, Consolidated Edison, etc. So when they talk about utilities, these are the companies they're talking about. And rest assured that most of you, if not all of you, have all of this because, as you know, I have some dividend-producing U.S. companies in your portfolios. I have foreign, I have international, we have bonds, etc. If you have questions about this, I would certainly be happy to sit down and discuss this with you. But your portfolio is sort of like a stew. We have a little bit of all of this. The prognosis, in my opinion, it's going to be a little rough in the beginning, as we're starting to see now. If you've been following these webcasts when the market was at 13.8, I told you, I thought it was too high. We're seeing now today it's around, I think 12.8, somewhere in through there. It's up a little. We're going to see some bumpiness. I do think we're going to see a good holiday buying season. I think you're going to see your Walmart figures looking pretty good the day after the holiday. I do believe the Congress, because they have to, are going to come to some realization, and everyone in Washington will be a little grown up. I think there's some thinking going on in Washington now about how they can get together rather than how they can, oppose each other. So I think the future looks very good. The unemployment, yes, the unemployment cannot stay the way it is. But you can see with some of these companies, and then we're talking about the countries in Africa, we need people that have certain skills. And that's really what this is about, the skill base and where they're going to be used and what they're going to be needed. So you're going to be getting your statements the first week in January. If you haven't already made appointments for after the beginning of the year, so we can see how Congress, the makeup of Congress is, what the President's speech is at the inaugural address, please give me a call. We'll do that. But have a happy holiday and Thanksgiving and Christmas and New Year. Thank you.